so the FDIC is not going to get any more money, as far as I can see, for 3 more years from the banks. We'll pick this up on the other side.
All right. We'll be right back after this 4-minute break with Bob Chapman. To get a complimentary copy of the International Forecaster, call 877-479-8178. 877-479-8178. Back in 4. Stay tuned. Get your exercise done. Welcome back to the Power Hour, ladies and gentlemen. We're talking to Bob Chapman today. You get a copy of his newsletter. Go to theinternationalforecaster.com about the financial situation of this country. I'm going to take some phone calls today because many times we don't get a chance to do that. And a lot of you like to get in line to talk to him. 800-259-9231. 800-259-9231. Bob, what do you think as far as gold and silver right now? Are we still seeing that it's going to start climbing?
Yes, we still are, and it will continue to do so. We'll have a rally into the beginning of April, and I think that what will happen is that we'll have some kind of a hiatus where it'll go sideways or regroup, so to speak, and then through the remainder of the year it'll go higher. I think this year easily we can see 1550 to 1650, which is about $200 or $300 away. And let's see, it's about, say, $400 away. And there's a good chance we could go to 2,000 to 3,000 before the end of the year. So we'll say somewhere between, to be conservative, 2,000 and 2,500. And so that's the way I see it. Silver, in all probability, will break the old high of around $21, $20 in that area. Break to 25, probably break to 30, maybe higher. That's a hard market to tell, and the reason why is tremendous amount of illegal shorting going on, which the CFTC refuses to do anything about.
Okay, explain illegal shorting.
They have concentration, and what that is J.P. Morgan Chase and HSBC own about 64% of all the shorts. That's concentration. That's too much for any one or two entities to control.
And that's betting that the market will go down?
Yes. And so what's going on there right now is that after 16 months, they're going to tell us whether they're going to abridge that or change that situation. And that's coming up here in the next week or so. And I don't think anything's going to happen because the whole thing is rigged. Gold and silver are going to continue to go up as they have for the past 10 years, unabated and very profitably for the owners. I mean, we've got people like Butch Parr bought silver at $350 to $380 and had some financial problems, sold around $13 and paid his house off.
Wow.
And so, these are the kind of things that can happen to you. So I'm very bullish on gold and silver bullion and coins, shares, the whole shebang, and I'm not very bullish on anything else.
Well, gold right now, let me just tell everybody, gold is at $11.33 right now, and silver is at $18.62. The market is open today for gold, but that's about it. The rest of the, of course, the local domestic markets are closed. The gold is $11.33, silver is $18.62. We'll be right back after this 3-minute break with our own, and he belongs to a lot of other people too, Bob Chapman. We'll see you after the break. Stay tuned. Joining us is Bob Chapman today, as every other Monday. We are always so thrilled to have him join us, but not so thrilled about his information. The fact that we get to hear it first on the Power Hour and first in his newsletter, The International Forecaster, means an awful lot. We got a lot of callers, but I want you to go back to the FDIC and revisit just how strong or how weak is the FDIC, Bob?
Well, they have $93 billion. $45 billion was given to them as prepayment for 3 years by the banks who fund them. That leaves that $93 billion to handle the failure of banks. Now, this year and probably the first 6 months of next year, anywhere between 1,000 and 2,500 banks could go under. I would put the bottom at 1,000. And 1,000 would probably cost somewhere in the vicinity of $500 billion. So if that happened over the next year and a half, and all they have is $93 billion, they're not going to make it. Now, the choice is the termination of FDIC insurance, another bill be sent to the banks to refortify the FDIC, or the taxpayer has to fund to bail out the taxpayer, if you know what I mean. And so it's not in very good shape.
So what is happening is we're playing Russian roulette. We're putting our money in a bank, we're spinning the chamber, and hope that our bank does not come up with the bullet in it, correct?
That's right. And that's the same thing is true if the stock market goes down with other kinds of investments, such as cash value life insurance policies, CDs, annuities. They're all generated. Well, two of them are generated on the stock market, unless it's a mutual company and in insurance, because they only invest in bonds. But as far as the banks are concerned with the CDs, they could become victim of a failure, and maybe you wouldn't get your money. It's hard to say, but that risk is there. So why take all that risk in the biggest bull market in history in gold and silver? So what you do is go to the place where you can put your money safely, and maybe it'll appreciate beyond inflation or beyond the collapse of the economy, and perhaps there'll be a great deal of money made. But that's not the real reason. The real reason is to protect what you've got.
Okay, let me ask you a question. Let's say somebody out there listening has been able to scrape together $100, and that is it, $100 or $500. And they are depending upon you to tell them whether or not you feel like that is going to be an investment they should make with this only $500 they have discretionary income. Are you telling me?
Buy junk silver.
Buy junk silver. So you're telling me the gold or silver, probably the silver because of the amount of money involved, would be the best thing they can possibly do with that?
And the second thing would be if they had $250 or more, they could get a fifth of an ounce coin, like the roosters and the francs of different kinds and the pesos and so on. And so those are available as well, anywhere between $250 and $325 each. And so that would be the next step for the small investor.
Okay. All right. I want to move on to the tungsten gold issue. I know the story's been out there a lot. Yeah, somebody pilfered all of our gold. Looks like it was in the Clinton administration. Looks like we got a bunch of fake gold out there that's covered in, what they call it, gold, like silver-plated is now gold-plated bars of gold. How serious is this problem? What is that going to mean for the price of gold and for the financial arena?
Well, first of all, we don't know. And the reason we don't know is the only ones who have spoken up about receiving tungsten bars, and that is not official, were officials within the structure, unnamed, in China that received the shipment of gold from London. I think it was probably from the LBMA, which is the equivalent of the COMEX in London. It's a bigger market than COMEX in gold and silver, incidentally. And they said, look, we can't accept these. We've checked them, and they're tungsten with gold covering. Of course, everything was hushed up. Nobody will admit to anything. We don't know how much gold they received. We don't know how much gold was altered. We don't know who did it, but all signs point toward people within the United States government, probably during the 1990s. And so it's a very mitigating factor. And in the meantime, what people have done that have bullion that purchased it any time after 1990 are having it tested.
Okay, now, it's real easy. It's real easy if they went into the mint and they bored into each one of those things to find out if they're real or not. I don't think they want to do it. It's just that simple. So anyway, let me go to, Lauren hung up. Lauren, call back and I'll get you on. Let's go to Ralph in Michigan. Ralph, you're on the air with our esteemed guest, our financial guru, Bob Chapman. Go ahead, please, Ralph.
Hey, Hey, Mr. Chapman, and hey, Joyce.
Hey there.
Hey, I got a question. Now, I was taking and buying gold, but then this price went up. It got a little bit too unaffordable. And I got a thing from Steve Quell talking about palladium, and that it was the thing to invest into, and that was at about $150 an ounce at the time. So I went ahead and got palladium, and now palladium's up to like $4.59 an ounce. And I was thinking that at 5 it'd be a good time to sell because I know palladium's a little bit more riskier than that. What do you think, Bob?
Well, first of all, palladium and platinum both went up because they were forming an ETF, and the ETF had to buy
An ETF is a what? ETF is what?
An exchange-traded fund.
Okay.
In other words, they buy it and then you buy shares in the fund, and supposedly they have all the platinum and palladium, or they have some minimal amount, when in fact all the ETFs are buying